All right, ladies and gentlemen, welcome to episode 21 of Beyond the Headlines. So, very exciting to continue to move along. Not an insanely news packed week this week, but some things we can definitely chat about when it comes to the Olympics starting up. We're seeing more EV woes out there that we're going to take a look at, some follow up to CrowdStrike last week. You know, everything always keeps ticking. So I know you're over there trying to buy a dip there on SMR, Steve. But other than that, how you doing?
Trying to manage a dip.
Yeah, but fairly good, fairly interesting day. We're just overall market point of view. I guess we could just take a second, right? The rotation that we're looking at is continuing, where we're seeing the Qs not doing
Small
so
caps.
well,
Ooh.
right? And then IWM, which is our small caps, seem to be doing fine. We talked about that in prior episodes. It continues to be the theme. I really like the look of IWM right here.
Yeah, I wouldn't short that.
Yeah, I wouldn't be betting against. That's a bull flag, as stereotypical as it can get. But let's start with last week's follow up and CrowdStrike. And the reason I wanted to bring this back up, because we both came to the same opinion where it was on this day right here. The last time we were talking about CrowdStrike on that gap down. Remember, they shut down the whole internet, everything went bad. Both of us said, I'm not going to buy this on a Friday going into the weekend, right? Who knows what investigations going to be opened up or fallout would come from this. And actually got some comments. I had someone DM me and say, this is a great company. You should be buying the dip and blah, blah, blah. And person could be right, but we were proven right this time where it's just been bleeding ever since then. So, in my opinion, again, if I still like the cybersecurity space, I think with AI, it's going to continue to be a thing. But if this thing's going to come all the way back up here to $400, it's got a lot of work to do, right? Luis Yamada, who is one of the OGs of the CMT, of the technical analysis group that we're in, always just talked about the bigger the drop, the longer the need for repair. And I think that's what we're going to see here is just a little bit of a time for repair. So do you have anything to add there, Steve?
Yeah, I mean, looking at my charts, Friday was the day that we were discussing this, and it was holding the 200 day. Well, fast forward to Monday, Tuesday, Wednesday, Thursday, Friday. This week, nothing but red candles below the 200 day. So it's literally done more technical damage this week than it did last week when we first started
Mm-hmm.
talking about it. And this really just kind of comes into my rule, and it mostly applies to like a stock maybe that you're watching or you're thinking about buying because it gapped down on day one of bad earnings. You have to remember people have lives, they're at work and they're not seeing this, and they come home and they check their portfolio and they go, oh no, and they look left and they go, well, if it breaks this level, I'm out. And so these types of disappointment plays have a way of just kind of rolling over and double and triple testing lows just to kind of test the resolve, and like Michael said, bleed. I say this is a bleed out scenario. And so by sitting back and stepping back and waiting, again, the CrowdStrike thing was pretty significant. If we're just talking bad earnings or kind of a miss or something, if you can sit back 3 or 4 days and then look left and kind of see where the price is basing, you can start to judge where the big money is maybe starting to nibble and find support. Those are going to be some good entries. But the takeaway here is day one, gap down, sit on your hands, just stay away.
Yeah, and right, you don't get events much bigger than this. They brought down almost the whole world for a couple hours, right? Flights stopped moving, trains weren't on time, and all of that. So yeah, just more of the same. Again, if you like the company and your plan is some sort of dollar cost average over an incredibly long period of time, then that's different game than me and Steve are playing. For me, I totally agree with Steve. As long as we're below, I'm more of a levels guy. As long as we're below this level that I marked right here, I'm not really that interested for now, unless something
Which, by the way,
crazy
is where
occurs.
the 200 SMA pretty much lies, that same level there. So there's a correspondence there of those two concepts.
It's funny how those things often line up.
Hmm.
Yeah, so that's CrowdStrike. Again, there's people saying, "Hey, buy the dip." Contrary indicator there. Speaking of contrary indicators, I just want to get this out of the way quickly. Every time I see Zero Hedge tweet, and if you find someone who is this good at being wrong, there are trades to be made here. So I just want to go over a little bit of a trade that I took in Japan. So just tweet someone big is blowing up in Japan. It's taking down the Nikkei, the gold, crypto, right? Everything's blowing up. Zero Hedge, for those who don't know, is just a website that is designed to scare old people, and that's what they do. Is they just tweet, the world was running out of wheat and it didn't, and then it was running out of natural gas and it didn't, and so on and so forth. So when you see news like this, sometimes it just behooves you to kind of bring up the chart. So on EWJ, the day that this was, right, everything was blowing up and it was the end of the world, was this day right here. After a nice push down, and I actually noticed that this was nearing, sorry, get my zoom here. This was nearing this prior area of support. So I figured for maybe a longer term trade. I could take a shot at 67 here. I could lean against 65. And then maybe if we end up pushing into new all time highs, it ends up being a great spot for that. So, just to mention that sometimes following a guru who's right all the time won't be as profitable as sometimes finding someone who is wrong all the time. Same thing with Bitcoin, right? That was mentioned right here at this nice little pullback Bitcoin lows. I think Steve's going to be right with me on this one. I still really like this chart. We've been talking about this potential flag here going on that could break us out to new highs on crypto. It's been, volatile inside of this flag, but that's crypto, right? If you don't like volatility, trade something else for sure. And now it looks like we're cozying back up against this high. So I'm going to be watching on the weekend because for some reason it always seems that these breakouts on crypto always happen on like a Sunday night. So I like the look of that. So again, as a sentiment indicator, when you see everybody, especially people who are wrong all the time, saying one thing, sometimes it makes sense. If the chart is telling you something different, then look at something else.
Yeah, no disagreement. I'm still fully bullish on crypto and I'm all in on XRP. I've talked about that in the past and why I like it. It's still a bargain to me. I'm not saying buy it, I'm not a financial representative, but I am extremely bullish here. I think if it takes out 64 cents, you can look at your own charts. It could have another leg higher, but I'm bullish, across the board on Ethereum, Bitcoin, and XRP and XLM. What keeps me bullish is, some of the headlines, maybe we'll talk about it next week, Michael, are the BRICS nations. They're kind of just thumbing their nose at the rest of the world and they're going about their business with asset backed currencies
Mm-hmm.
and they're using the blockchain for certain transactions. And that's really where, something like XRP comes into play is if we do get on like a global financial system where all fiat currencies are gone, that's when you can step in with a blockchain technology and start moving money around the globe, cross-border payments, without concern because all currencies are backed by one form of silver, gold, what have you. I mean, there's a lot of information out there. If you want to look into it, just go to TikTok and search quantum financial system, and you'll go down rabbit holes.
Yeah, and I was listening to a podcast. I forget what it's from. I think it might have been Odd Lots, which is Bloomberg's podcast, and they had someone on basically talking about if you really want to unlock like a global productivity, that's how you do it, right? Is you create the ease of trade back and forth between two countries with a currency that's just I hit a button, I buy the thing from you, and this gentleman's argument was just like that's how you see the world just double in the amount that it can produce and it can do is
I,
make that flow simple.
I think I told the story, but I'll tell it again. The hedge fund guy who says we do business all the time in Europe, and we're having to send wires over there that get caught up in the SWIFT system for 3 days afloat. He goes, I kid you not. The other day, we did a trial using the XRP ledger. We invested 50 million. We sent it in 5 seconds, and it cost us 30 cents.
Yeah, that's just insane.
That's zero friction right there.
Well, and so that's something that we're both bullish on. Something that we're not both bullish on comes out of
Hmm.
this Ford, the largest Ford stock drop since 2008. And I remember, I was still young in 2008, and I remember trading at the prop firm and seeing all of the automakers sitting in front of Congress, basically begging to get bailed out. All but Ford actually was the only one who didn't take the government money. So just to highlight that the biggest drop since 2008, right? There was talks of every automaker going bankrupt in 2008. So if you have a drop that large, it's a pretty big deal. And they also talked about part of it was some warranty issues that they were having, but then there was also a lot of EV woes. Now, if we go to this chart, this is something that as soon as I saw this is actually something that reminded me of something that you teach about all the time, which is the pro gap. If you have people running into one direction or another. You can see this thing, it's only a move from 12 to 14, but for Ford, that's a really big move. Makes me think that there was a lot of people that were betting bullish going into this earning and got completely shellacked. And then the candle after earnings. So this yellow line that we have on the charts at Trade Ideas, this is your earning date. Not only did it gap down, it opened almost at the high of the day and then closed almost at its low. Now we're on to the next day and just can't get anything going. So, EVs seem to be a problem. We expand that out now. Take a look at Tesla. Same thing. It had an earnings gap and not as bad as Ford, obviously, but falling apart. So more of what me and Steve were talking about, that some of these autos are having problems with EVs.
This is a good time to remind people that you and I were talking about these headlines 4 or 5 weeks ago, and I have no problem, like I said, crapping on the EV technology and the market.
Mhm.
A couple things. First off, while you were talking, I'm looking at TM Toyota Motors because they are the one of the smarter car
Yes.
builders because they only have one model. They only have one EV model, so they have hardly any EV exposure. However, that's still an ugly chart. They
Hmm.
slammed into the 200-day. You don't see it, but those most recent highs were 200-day slams. Can't get back above. So it's an ugly chart in Toyota, even though they've kind of hedged themselves and sheltered themselves from electric vehicle exposure. And again, just to remind people, you know, you buy an EV, you get T-boned, your insurance is going to skyrocket because they are going to total the car. They want nothing to do with cars that have battery packs that are in an accident. They don't want to put those back on the road. So it's either that, total it, or put $17,000 of new battery packs in there. I can go on the reasons why I don't own one, and I would never own one. And in my opinion, I just think it's kind of a keeping up with the Joneses. Am I good? Am I doing the right thing? Kind of a purchase. I think people are coming to their senses, and these headlines are showing it. And I think you can't argue with the money, and the money flows are coming out of it. Tesla kind of gave an interesting head fake, but I think what was happening there, I'll finish on this, was it was just the years and years and years of positive mentality of Tesla. Oh, everything's going to be fine. They're Tesla. And you and I started talking about this, but the price action was kind of ignoring what we were talking about. Then the earnings hit. And like I
Hmm.
said, when the rubber meets the road and when the money flow really does show what's happening, maybe you and I were a little bit early on that. And Tesla was a bit of a head fake because the other stuff just doesn't look good.
Yeah, and it's right here, right? We hit these prior highs at 265 and just couldn't get going from there and fell down. Now it looks like we may be breaking to new lows here on the daily chart. And, for me, this is the technology cycle. Someone comes out with a new technology and that technology is the greatest thing ever. You could just look at the internet boom, right? Oh, this thing's amazing. Everyone needs to be on the internet all the time, and there's pets.com and all this craziness. And it doesn't mean that there isn't going to be some future version of an EV that ends up doing fantastically. Maybe they figure out the battery tech, right? Maybe whatever it is. But it's like all technology cycles. There's a period of this is new, this is amazing, let's hype this up, this is the greatest thing ever. That causes this run. And then at some point, people realize they've gotten a little bit too ahead of their skis. That's going to drop down dramatically, cut out most of the garbage that's out there. There'll be one or two players remaining, and then they'll figure out new technology that push stronger. Maybe it wasn't even thinking of going here, but AI could be the next thing, right? Nvidia's had a hard time getting up here. Potential double top. It's been fighting. We could be into that zone now on AI, where again doesn't mean that AI is not going to be an amazing thing. A little teaser. We use obviously AI for our trades in trade ideas, but now we're building an AI out to help customers and do things like that. So yes, it's going to be a technology. The question is, has the market gotten ahead of the story? And I think that's a lot of what was happening with EVs is the market was basically pricing in that they had EVs figured out and they were going to be absolutely fantastic and there's going to be no problems. And then as the problems come up, that ends up hurting. It's going to cause a lot of bloodshed, probably in the automotive department, and then some company will figure out, a new
600
battery.
pound gorilla will
Yeah,
emerge. Yes.
and then we move forward from there. And it's again, age is old as time. There's nothing new under the sun. The next technology, which again could be AI, will do the same thing. That's one of the things I love about capitalism. One of the things I love about humans. With capitalism, we create problems, and then someone else comes along and sees an opportunity to solve that problem, and then someone else comes in, and then that creates another problem, and so on and so forth, right? So it's just the way it goes. Now, I'm not a big Olympics guy. I don't really watch the Olympics too much. There's one thing I did see that the internet's memeing now. There is some sort of kayaking event where they get dropped 6 feet down out of the kayaks into the water, and then they can fight with the kayak paddles. They can actually hit each other with the kayak. Olympics
Did they do this in Rome
kayak
somewhere?
cross. Yeah, so kayak cross. The best way I've heard it described is it's what would happen if you had, like a 10-year-old design a sport where they're in these little kayaks and yeah, they get dropped down out of 6 feet above to start the kayak event. And then they're going to go through the kayak event and they're actually going to be battling as things go with these fake rapids and everything. So I might watch this. Again, I'm not a huge kayak
So there
guy.
you go.
Yeah, they can
The
push each
Olympics
other. They
realizes,
can.
I think the Olympics realizes their viewership has been suffering, has been declining, and so this is the reason they've invented this kind of stuff to try and spark some interest.
Why not? Well, I don't know if you've seen some of the stuff coming out of Romania. I don't. This is a tangent, but it's our podcast. We can do it if you want. There's a sport now in Romania where they're taking men and they're seeing how many women it takes to take down the
Yes, I've
men.
seen it. Oh my God, it's brutal.
It's a big fat guy, and he's like, it's just so.
Got three women trying to hang off of him. It's brutal.
Yeah, hopefully we don't go that far, but this looks fun.
No,
Oh, and you have to do if you don't do a
roll.
360 at the end in your kayak, your time doesn't count. So again, it seems like a child made it up. So for
Yeah,
that, maybe I'll grab a
it's
couple
games.
beers. But other than that, don't really care. But we would be completely amiss to not talk about it at all. If there is a trade to have on the Olympics, which is actually something that we talked about earlier, was this EWQ, which is our France ETF, very much lagging the US when it comes to how strong it's been doing. A couple weeks ago, it had this nice down. I think we were talking about it while it was falling apart here. Seems to have caught a little bid, maybe, in this kind of 35 to 36 area. You know, I know you're not going to like this technically because it's below most moving averages. But I wanted to bring up this LVMH, which is Hennessy and Louis Vuitton and all of these. This makes up, I think it's like 20 something percent of the entire French index. There's no technology in the France index at all. It's all industrials and it's all these luxury
Wine,
consumer goods.
spirits,
Yeah,
foods.
what you think about when you think about France for sure. And I got to say, this $700 level, right? We had some
Yeah.
support right in here, and we had some support right here again. We're back there again. If I'm looking to play the Olympics, this is the only kind of trade that I see is maybe you buy this in front of 700, you put your stop below 700 and walk away. But do you see anything here at all, Steve?
No, I mean I agree. You define your trade, you define your level, and I've been doing a lot of that lately. You just put your stop in and walk away.
Yeah. Well, it's funny. Me and Dave from Trade Ideas, who's our technical chief CTO, chief technical officer. He does all the. He's a quantitative trader, and he's been talking about a lot of that as well. Where In these markets where there's so much noise and so much chop, sometimes you're better just, this is the price I want to take my trade. I'm going to set that level. I'm going to put out a stop loss and profit target, and I'm not even going to know what's going to happen. I'm going to walk away. That to me, again, seems like one of these trades. Sometimes I like to take these news trades kind of based off hype. Again, this $7 level seems huge. One thing I want to say is that because this is an ADR and for some reason it's on the pink sheets, this isn't being traded on the NASDAQ or the New York Stock Exchange. So just everybody know that there's way less regulation on the pink sheets. I don't think you're going to have a problem with France. If this was something from, a more third world country, I'd be a little bit more worried. But just know that you don't have the protections of Nasdaq and NYSE listed stock on this one. It's
Hey, I just got to tell you, as we're speaking here, I'm multitasking, but
yeah.
Andy just said, "Hey, I'm really looking at TSLS here because our 401k allows us to actually go short Tesla on a one-time short ETF."
Oh,
And I just bought some. And so did he. So I said, it's funny you bring that up because Michael and I were just shitting on EVs, and he
yeah.
goes, "Well, that's a sign." I go, "Well, you're right, it is. Let's go."
Well, a nice little pattern, right? So I brought up
Yeah,
TSLS here. So for those who don't know, there's many of these larger stocks out there are getting inverse and they're getting regular ETFs. And what Steve was talking about, he does a lot of trading. It's IRA or it's a 401k there.
it's a 401k. It's a 401k, but it's called self-directed. So basically, I can trade my own 401k in and out all day long, day trade, swing trade, whatever.
Yeah, and it's the
Can't go
same.
short, and I can't buy triple leverage shorts. But apparently, I can buy AAPD, which is the Apple short, and
Hmm.
MSFD, which is the Microsoft short. Since they're not levered inverse, apparently they're letting us do that now, and it's kind of a nice little crack that's opened up for me because I felt like I've had one hand tied behind my back in a 401k. I have other accounts I can short in, but not that one, not the
Yeah,
big
well,
guy.
it's the same with me. So I up for if we have a Canadian watcher, but it's like the RRSP up here. It's the same thing. You put money in, that money gets deferred on taxes and blah blah, and then eventually when you take it out when you're retired, but you don't pay for taxes on the gains there. So a lot of us do a lot of trading in those tax deferred accounts. So what this ETF is it's going to mirror the inverse of a Tesla. So as Tesla goes down, this can go up. I always feel the need to say this that these are made with derivatives, so there is some degradation on it, which means that
Yeah,
this will drift lower over time. Now, the higher up the leverage scale you go, the faster that is. So this is only a one times
yeah,
bear ETF. So it's not going to be as nearly as bad as the two times and the three
mhm,
times. There's not going to be that degradation
correct.
as bad. But yeah, so if you're like us and you think this Tesla move is going to be continue to the downside, it's just a simple way to take the trade. So I like that.
I'm in.
Cool. All right, Steve. Well, I think that covers everything we wanted to go over this week. Did you have anything else for the kids?
No, just have a plan, trade your plan. And I mentioned I'm using stops a lot, but I don't use them in the opening ranges. The opening range is just no man's land of stop hunts. So I pull my stops first half hour of the day, but I have no problem inserting them throughout the day.
Yeah, and it's funny that I was saying the same thing, but it's funny that people are so amazed when I say I'm usually not even here for the opening. Like this morning, I went and I did Trader TV in the morning, and I went to the gym, and then I came back like 10 minutes or so, or later after the open because I'm not even interested anymore. Now, if you're a day trader and you're scalping the market, that's a different beast. You probably should be here for that. I could argue
I would say
maybe
one
not.
thing that I've noticed with Andy, and we'll just leave him with this: if you're day trading or you're waiting for the open and you're looking for things to buy, I'll tell you what doesn't work. Anything that's green the first 20 minutes, it's running up. If you chase that in the first 20 minutes, more likely, I've seen this over and over, day after day, chasing green stocks and on new highs on the open, you're just begging to be reversed. And if I'm speaking to some of you, you might know exactly what I'm saying. So be very careful and be contrarian with your entries and contrarian with your exits. Buy when they're selling and sell when they're buying.
Exactly. And if everybody's saying that the open is the most important time of the day all the time, maybe it's not. That's kind of been my thing, is maybe you just don't even pay attention for the first hour, and then you start looking around. That's what I've been doing. I've been doing it for about a year now, where only enter my swing trades in the afternoon, and it's been so much better. It's been so much more relaxing. Sometimes I miss something. That's what you got to be okay. It just rips and it runs without you, but that's what we do at Trade Ideas. We find new trades, so I just know there'll be something there tomorrow. So again,
Mhm.
if you've made it this long in the podcast, please just give us a like, a thumbs up, retweet, hearts, whatever the social media is doing at the time. It helps the algorithm. I enjoy doing these every Friday. I hope you guys enjoy watching them on the weekends. Until next time, talk to you soon.
All right. See you.